Three of the largest digital assets in the world just got tested by the exact same macro environment in the exact same week. Recently, Bitcoin exchange traded funds bled out roughly $1 billion in net outflows. Ethereum exchange traded funds ended the week down $65 million. And XRP exchange traded funds pulled in $60.5 million in fresh capital, the highest weekly inflow into XRP ETFs since the start of 2026. In the same week, same investor base, same global conditions, three different outcomes, and only one of those outcomes was positive. What that tells you is something interesting. When professional capital was forced to make a choice between three options, they did not just sit out. They sold one and they bought another. And the one they bought was XRP. That is not retail FOMO. That is institutional desks making a deliberate allocation decision between three of the most established crypto products available and consistently choosing the one most people are still calling underperforming. So I want to walk you through what happened, why it happened, and what it tells you about institutional flow, and maybe even what it tells you about the rest of the year. Now, drop in the chat, do you hold XRP ETFs? I do hold a small portion of Canary Capital's XRP ETF, but nothing significant. You know, I personally like to hold spot XRP, and I want to know, how about you? Do you like to hold the actual coin or the ETF? I'm just curious on that. Now, let me tell you what just happened recently and give you some clean numbers and help you to understand what professional capital just did. So again, XRP exchange traded funds saw $60.5 million in net inflows over the last couple of weeks, back. Depends on when you're watching this video. And that was the strongest week for XRP ETF. And by the way, we are headed towards the end of May. All right. So that was the strongest single week for XRP ETF capital since the start of 2026. So cumulative inflows since these products launched in November of 2025 are now sitting at roughly $1.36 billion. Total assets under management have crossed $1.18 billion, which represents about 1.3% of XRP's total market capitalization. If I'm off by a few numbers, please don't, get upset about it. Okay. But for anyone watching who is newer to understanding about digital assets, let me explain what an ETF is, because the term gets thrown around and I don't know if you understand it, but I want to respect that maybe you don't, right? So an exchange traded fund is a financial product that lets investors buy a single share that represents exposure to an underlying asset, like a stock, a bond, gold, or in this case, XRP. ETFs are how most professional capital enters new asset classes because they are regulated, easy to custody, and trade on the same exchanges where pension funds, asset managers, and financial advisors already do their business. When you see ETF inflow data, you are watching how institutional money is positioning. Retail buyers can use ETFs too, but the volume that moves these products is mostly coming from financial advisors, asset managers, and institutional desks. And so again, the ETFs, they give you exposure to the price, okay, but it doesn't allow you to hold the actual coin of XRP. Now, compare what XRP did to what Bitcoin and Ethereum did in the same window. Bitcoin ETFs lost approximately $1 billion in net outflows during the exact same week. Ethereum ETFs ended up like I said, with $65 million in net outflows. So these are three major digital assets that sat side by side in the same macro conditions with the same investor base watching, and only XRP attracted positive net outflows. Now, the price movement match the flow, okay? Because in that time frame, XRP did gain 11% in a single trading day during this same period, briefly touching $1.50. Now, it did come back down. The inflows were not just numbers, okay? So we did see the response of that. And so they did translate directly into some real buying pressure that lifted the asset up a little bit. Now, I don't like when it goes up, honestly, at this point, because I just want to keep accumulating as long as I can, right? And I guess when it really takes off, I won't be mad either. But when a small percentage of an asset's total market cap rotates through an ETF in one single week, the underlying price, should respond to that. And so that's what happened when it went up a little bit. And so you may have seen XRP go up a little bit. That's exactly what happened, is that they came out of the Bitcoin ETFs and Ethereum and they rotated into XRP. Now, the $60.5 million week didn't happen randomly. 4 separate catalysts converged into the same window and combined to produce that flow. So I want to walk you through them so you can probably know what happened. And, this is just how the market responds a lot of times. So the first catalyst is the Clarity Act. Remember the vote on May 14th. The Senate Banking Committee passed the Clarity Act by 15-9 vote, with 2 Democrats crossing the aisle to support it. That bill would lock XRP's commodity status into federal law permanently and would unblock months of procedural delay in the bigger legislation process. Institutional investors who have been waiting for regulatory clarity before deploying capital into XRP saw the vote as a green light. And so they probably been waiting for 2 years, and maybe some of them started to make a position. The ETF inflows reflected that shift in sentiment almost immediately. So maybe that's what wind up happening. Of course, people are not going to go all in until we get the finalization, and we'll see what happens with that. But the second catalyst is the tokenized real world asset story on the XRP ledger. Tokenized assets settling on XRPL have crossed $3 billion in total value, which puts XRPL among the leading non-Ethereum blockchains for institutional tokenization. When professional capital sees that volume of real world asset activity on a network, they recognize that XRP is not just a speculative bet. It is the underlying utility token for an institutional grade settlement network that real institutions are actively using. The third catalyst is the broader infrastructure story that has been building all year. The JP Morgan and MasterCard tokenized treasury settlement, the Ripple acquisition G Treasury, the Standard Chartered and Neuberger Berman credit facility, the Ripple national banking charter from the OCC. Every single one of those milestones build the foundation under XRP, and professional capital tracks that foundation very closely. So the ETF inflows are the visible measurement of that institutional confidence accumulating in real time. The fourth catalyst is the macro environment. The Federal Reserve is signaling rate cuts even as inflation runs above target, which means professional capital is actively looking for assets that can hold value while the dollar is being structurally devalued. XRP fits that profile because it is neutral, scarce, and tied to real institutional adoption that compounds across cycles. So when all 4 of those catalysts converge in the same week, you get a $60.5 million inflow and an 11% single day price move. And it's good to know these patterns so that you can know what kind of moves will drive the market in those times. And you got some people who swing trade those. Okay. I don't swing trade XRP. I just accumulate and hold. And if there's a pullback, I keep accumulating at this point. So the real ideas around this is whether this is a 1-week event driven by short-term sentiment or the beginning of much larger structural shifts in how institutional capital allocates across digital assets. We'll continue to watch and see where money is moving. You want to watch the liquidity and see where, big money is moving, right? So the data suggests that we're into something where institutions are starting to accumulate just because of all of the events that are happening in real time, right? So here's what I want you to take from this. When professional capital makes a deliberate choice between 3 options and consistently picks XRP, they're telling you something that the headlines are not. They are not waiting for proof like you. They're not waiting for the price to go up. They are placing the proof with their own money in real time, right in front of you, right in front of your face, while you stay scared. If you are scared, hopefully you're doing what they're doing. But the reality is that you need to determine whether your own position is structured to benefit from what professional capital is already doing, because they're not just buying XRP. They are buying it inside vehicles designed to compound over multiple decades without bleeding capital to taxes along the way. So that's the part that most retail investors miss entirely. They focus on which assets to buy and never think about which vehicles holds the asset. If your XRP is sitting in all regular accounts, brokerage accounts, every dollar of appreciation that comes from this institutional flow eventually gets partially returned to the IRS when you sell. So that's just the math of capital gains. The asset is positioned correctly, but the vehicle is positioned in a way where you don't have tax advantages. And so the gap between those two decisions on whether you're going to leave everything to taxes and they come for 30, 40%, whatever your tax rate is, after you've appreciated and gained all of this capital gain, you basically got to give most of it back, And I say most of it because really 30, 40%, I mean, that's just leaving you with 60% of the upside. That's just not a good position to be in. And I think that a lot of people definitely need to expose some of that profit to a tax-free account. And also, if you want a real plan for your specific situation, then we get you very clear on our clarity calls, and we just map out a game plan for you to know exactly what structure you should have to protect your assets, your estate plan, and your LLC. All of those things, we really do discuss how much you should allocate maybe to physical metals or digital assets or the stock market or real estate. Your goals are yours alone, and they are designed for you. And that's what we go over. Both links are in the description. And remember to drop the comment if you're going to diversify into ETFs as part of your wealth building strategy, or if you're going to hold on for dear life to XRP. I'd like to know how you're strategizing around these opportunities. Either way, the wealth transfer is happening quietly, slowly, and methodically. And I hope that you are on the right side of history. Go ahead and like the video if it added value, and subscribe if you have not already. And as